Hey guys, welcome back to the Opportunity Zone. I got Mr. Chris Lavin back again.
Mr. Nate Armstrong. What's shaking, bacon?
Lots, actually.
Lots.
So
I
let me,
disagree. But go ahead.
maybe it's not exciting for you,
It's
Chris,
not.
but when there's an IPO happening with potentially the biggest in U.S. history,
But isn't it really an IPO?
kind of, sort of,
Is it?
they're calling it that.
I know, but it's not.
So how,
The I in IPO is initial. You know that, right?
yeah, I guess. It was offered once, it was ripped away,
Yeah.
put on the pink sheets, and
Yeah.
now it's making its way back.
Yeah.
Kind
I
of
made
like,
a lot of money in the pink sheets one time.
well, you might make a lot of money. And if paying attention to this episode, okay, we can't give stock advice here, but pay attention to this episode. We're going to go through the news related to real estate investing, but one of them happens to cross over into the stock market quite heavily. So pay attention to this. House Republicans are crafting a bill right now which might force the push for the largest IPO in history. Okay. Next up, multifamily loans. We've got a new high on trigger. What is that about?
I'm still back. I guess we'll talk about it later.
You're going to fight on this IPO thing.
Yeah.
Okay. Multifamily loans. Right now, we have new levels of distress levels we haven't seen since 2011. We're going to get into that, what it means to you as an investor. In addition to that, we have both credit card and auto loans, highest levels since 2012.
I don't understand what's going on.
Okay, we're going to break all this down and what it means for you as an investor. So if you're considering investing in multifamily, or if you're already active and you're looking for more spots, check this episode out. Chris, I'm going to do a quick Bible lesson and then hand this thing over to you so we can kick off. The proverb today is Proverbs 6:6, and it goes like this. Take a lesson from the ants, you sluggard. My kids always laugh when they hear that word.
That sounds like a dirty word, doesn't it? It's like you're almost cussing. It doesn't sound right.
In the New International Version, they actually call it lazy bones. And so
No.
yeah, lazy bones. Take a lesson from the ants, you lazy bone. Learn from their ways and become wise. They have no prince nor governor, yet they work. They labor all summer. They gather food for winter. But you sluggard, how long will you sleep? Will you wake up, a little extra sleep, a little folding of hands to rest, and then poverty will pounce on you like a bandit. Chris, when we read this one at home, we were actually talking about how you like never sleep because you're like the Energizer Bunny. And this would be like the opposite. If you had a picture, this is not the sluggard. So that's the proverb of the day. Chris, would you mind giving us a blessing and we'll jump in?
I would love to do that because I'm filled with gratitude today. Heavenly Father, first and foremost, thank you. Thank you for the many blessings in my life. Thank you for the peace. Thank you for giving me the courage to have faith. Thank you for the direction in my life. Thank you for the wisdom that you've given me through some of my bad decisions and sometimes through your grace. I ask that you allow Nate and I to share our wisdom, our experiences, and even our mistakes so that the people listening could have a fruitful life ahead of them, a financially fruitful life ahead of them. I ask all of this in your name. Amen.
Amen. All right, let's jump right to it. We're going to jump straight into the big one. Well, what's going on here is that Republicans right now in the House, they're crafting a bill to end the conservatorship of Fannie Mae and Freddie Mac. What this is basically back in 2008 when both of these entities, which they essentially buy loans. When you go take out a loan from Bank of America for a house or US Bank or any of the other big ones, they don't hold that loan forever. They turn around and sell it. And most of the time they're selling it to either Fannie Mae or Freddie Mac. And so during the 2008 downturn, the great financial crisis, what happened is that these two entities, they took a blow, like they almost failed. And the government stepped in, bailed them out. And while they were putting in the bailout money, they said, hey, if we're going to do this, we're going to have control going forward. And now, fast forward, they have control.
Well, that just struck a chord that I hadn't realized before. If they're putting the money in, they're going to take control so that the property moves forward correctly. Sound familiar? Anyways, I got back to that. So here's what I think about this. And this is why I was laughing while you were like kind of surmising it at the beginning of the show. This is like, you got a big round boulder, and it's already rolling down the hill, and now everybody decides it's a great idea to push the boulder down the hill. So the boulder's already going, and all these guys are getting behind it, acting like they're doing something, when the reality is we all know that this brainstorm, this brainchild is Trump. came up with this idea to make this happen, and there's sound reasoning for it, right? Because right now we have Fannie and Freddie. Basically, they don't compete. There's no competition there. There's no competition in the market. And secondarily, I think that in my experience, I believe that once we have the separation, and once we go back to private with these things, um, that we will see an acceleration of loans transacting. It takes a long time right now. Like if you go to get a Freddie a waiver, it's 8-10 weeks before you get a waiver. What a waiver is mean maybe you need a little exception, you want a better interest rate, maybe there's some little blemish somewhere that you need to get an exception for. This is taking 8 to 10 weeks. Well, when you're closing on a multifamily residence, you have 60 days at most to get this bad boy done. So it's not super convenient to be waiting 8 to 10 weeks to get this stuff happening. So I think if you get the government out of it, you take the government employee mentality out of it, I think we'll have a better product. But it's still this whole nonsense of oh, everybody's pushing this bill forward. It's already happening, dude. They're already happening. You're late to the show.
Yeah, in fact, we'll give the announcement date of one of the major investors who holds a lot of their stock right now. What his anticipation is. That
I'm one of the major investors. I have 1,000 shares.
You got a seat at the table to push to. So I want to put up this post.
Can I just clarify one thing?
Yeah.
It wasn't specifically Bill Pulte at the time.
It wasn't that time.
It was the director at the time. So Bill Pulte had nothing to do with this. It was the seat, the position that has that control, and Bill Pulte just happens to hold it today.
So timing. Bill Ackman, who is a substantial investor in both Freddie and Fannie, he's saying that this is essentially the best bet that he's made for 2026.
It is.
And if you go on to read his whole article, he basically says, you know what, this is going to happen either during or before fourth quarter this year. That's what his gut is telling him based on all of his research.
Yeah, but when you have that big of a bat to swing, you have some influence on those decisions and the tactical execution of these type of plans. So
this could very well be, and we'll debate whether it's initial or not, it could be the biggest IPO that we've seen in our life.
May I say something without offering advice? If I had $10,000 in the bank right now, I would not run out today and buy Fannie and Freddie. The reason is it's going to be several cycles before the transaction. What do I mean by that? Like there's going to be some news and people are going to jump on this and the stock's going to go way up. You're going to buy and it's going to deflate when those people sell. If I was entering this market right now, today, not you, not telling you nothing, I would not be buying the stock. I would wait for a strong dip and then grab it then, and then I would be hedged against the pullback on it. Yeah. But I do not offer stock advice. I'm just saying what I would do, not what you would do. Me.
Was that a good enough legal disclaimer? All right, let's move on. We got to talk about this one. This is making headlines, but multifamily loan delinquency. It's up in a couple of different sectors right now.
Yep.
It's up with community banks. And then the big one is CMBS loans. Chris, maybe you can explain what a CMBS loan is and why on earth are we jumping from 2.6% to 12.9% in delinquencies year over year?
I know very well why this is happening. So what a CMBS loan is a commercial mortgage-backed security, a commercial mortgage-backed security. What does that mean? So like a facilitator or a servicer or whatever you want to call them, they go out and they align a bunch of loans, right? And they package them up in this one big package and they go to market with them. And they basically sell stocks for those products, those mortgages. So they got to raise $1 billion, let's say. They take $1 billion worth of loans and they package them up as one, they make it a portfolio and they go out to the market and they sell stock on it. And that's how they get funded by the acquisition of those shares. And that's how a commercial mortgage-backed security works. Community banks, they make lending decisions not wholly based on parameters on a piece of paper or a spreadsheet. There's a lot of relationship that goes into borrowing from a community bank, which is a good thing and a bad thing. So I tell you all that to tell you this. That's the reason why we're seeing so many delinquencies in that segment of the market. because Freddie and Fannie have very strict guidelines. Like you got to A, B, C, 139577174. Okay, the loan works. When you deal with CMBS, there's a lot of ambiguities. The one good thing about a CMBS loan is you can close it much faster. The one bad thing about CMBS loans is you pay more in legal fees because there's not a structured set of documents that you utilize. And so what that means is that there can be a lot of negotiations done and a lot of things happening before closing. And they're not held to the same standards as an agency, i.e. Fannie or Freddie loan. So because there's a little bit of a loosey-goosey stuff, and if I'm boring you, I'm sorry. I'm trying not to use a monotone voice. I will talk with inflection. Because there's some ambiguity in those lending products, I feel like that's why that segment is definitely falling to the wayside. And I'm here to tell you, this is gonna sound horribly opportunistic of me, but thank goodness, like this is where we're gonna make a ton of money because these people cannot service these loans. They cannot operate these properties in these downturn markets. They're not professional operators. They got in on the easy stuff. And now the banks are pulling properties back. Now, they're not necessarily taking them to foreclosure. They're taking them to what's called special servicing. And what happens is the bank comes in and operates the property. Banks don't want to operate properties, but they don't want them to go to foreclosure either, because if they go to foreclosure, they got to put up a whole bunch of cash and keep that cash liquid to assure against the bank's failure because of failing properties. So banks want to get rid of properties. We're buying a property at a severe discount as a result of this very same issue. Operators that couldn't operate. The property was valued at $122 million in 2023. We're picking it up for a mere $75 million. Big discounts because the operators couldn't operate. They're used to operating in good times when interest rates are low, when their variable rates were down in the basement. But now things are transitioning to high interest rate loans, and they don't know how to do it. So if you're a savvy investor and a partner with the right people and in the right position, this is a grand time for you.
Yeah. Chris, to the average person sitting at home saying, well, hey, if there's more delinquencies, there must be trouble in that asset sector. Like, that's scary to me. Can you break that down? Like, why is it actually a good time?
Because so a lot of people got involved in this segment when it was super easy to make money. 2% loans, and you could buy at a 5 cap, 4 cap. You're making money right from the very beginning. And what happened was that a lot of those low interest loans have either variable rate or they're expiring. 5-7 year loans are now expiring. And as a result, because of poor operation, they can't get refinanced at the higher interest rate, right? Because it costs more to service that debt, and the rents where they were can't service that debt. There's this thing called DSCR, debt service coverage ratio. You have to make more money, 1.25 times the amount of money it takes to service you have to maintain $1 million.
So the opportunity exists, as Chris was saying, for savvy investors to jump on these deals, because a lot of these operators, they're stuck. They have to do, if they're going to refinance, they have to bring cash to the table.
Yeah, they don't have it.
They don't have it. So then they end up calling us and we step in and do the bailout.
But can I brag a little bit, or should I wait till later?
Brag away.
One of the things that I want to talk about is our company is not a nonprofit, right? But the goal of our company is believe in more. And what more is for us, is to pretty much, best way to surmise it is we love to carry God's message into the world. And we do that by living by biblical principles. So the property I was just talking about in Atlanta, literally they got an offer that was going to just equity wipe every one of their investors. And I'm talking about like mom and pop people that have been working all their lives, saving their money diligently and invested $50,000 here, $100,000 there. And they were losing all that money. But because God has blessed Nate and I with the ability to make these kinds of transactions happen, we're going in there, we're going to take over that property, we're going to buy that property, and we're going to turn it around. And we're going to make really good profits for our investors. But the cool part is we're saving the old investors to hopefully get them, 50 or 75% of their original investment back, so that they don't end up giving up, their nest egg and they'll be done, because a lot of these people are retired. So God has blessed us with the opportunity to be in the right place at the right time, making the right decisions, to go in and reflect God's love and mercy on other people. Sure, we could have made another $10-15 million on this transaction if we wanted to, but we're not. It gives us every opportunity to go out there and put our money where our mouth is and do the next right thing. Sorry, I talk a lot.
No, I appreciate you sharing the vision. And if you're sitting on properties like that, or if you know of them, then make sure you become part of our world. Come to one of our events, get to know us. Let's see if we can collaborate with you on it, because Chris and I plan to do a lot more of these over the next few years, because there's a lot of need for it.
A lot of need.
Next up, I'm going to switch gears a little bit to single family, and then I just want to talk about the economy as a whole. Yeah. So single family, right now, we have a record amount of debt being stacked onto properties. So debt is up by 38% since 2020. This is a record amount, like I said, and it's mostly on home equity lines of credit. Couple this, Chris, with the fact that we have credit card balances are 12.7% higher on delinquencies, 90 days plus delinquencies, and auto loans, also 90 days delinquent, are 5.2% up. This is the highest that we've seen since 2010. There's a lot of people right now that took out more debt and they're going delinquent. Yeah. Any ideas what's going on?
No. This is a terrible guess, but I think that people got loans when things were good, interest rates were low, and the cost of living was significantly less. I mean, we've seen 4% increase over the past, 8 years, 7 years?
I was at the farmer's market on Sunday, and eggs were $10. Literally, like I remember when they were $4 a dozen just a few years back, four or 5 years ago. But they're 10.
That's the only logical conclusion I can come to, because unemployment is down, right? People are working, but I think the value doesn't have the dollar doesn't have the value it had several years back. Well, I know it doesn't have the value, but this just spooks me a little bit, like. Because at the end of the day, this really comes down to personal decisions, and people are being irresponsible with debt. I mean, at the end of the day, that's what's going on. I don't use debt unless it makes me money, and I don't carry balances on my credit cards. I don't buy things I can't afford. But not everybody's in that mindset, and I think that's what we're seeing.
So we're bringing this up because as an investor, if you're looking at getting into a certain asset, you really want to understand your tenant base. You want to understand what their debt to income ratio is. Are they qualified? Are they going to be able to make payments on the rent to you every single month?
Remember, credit card first, they stop paying that. The car note second, and then what's the next thing they stop paying? Rent.
Yeah. Yep. So Chris and I have increased our underwriting standards. In fact, the last property that we just took through our system, we doubled the amount of delinquency on the underwriting. We just want to make sure that we're safe no matter what we do on every day.
Yeah, we're responsible for other people's money, and we take that very seriously.
Chris, last but not least, I got to talk about.
There's so many jokes in this story. I gotta shut up. So I just have to shut up. I'm gonna shut up.
The Waldorf Astoria. This is like a premier hotel brand. The franchise. I don't know if it's a franchise specifically, but the Chinese own one in downtown New York. They just put billions into it, updating it, bringing it up to today's standards, and making it beautiful again. And they're selling it at a multi-billion-dollar loss. What on earth is going on?
Don't do it, Chris. Don't do it. What's going on? Let me be honest with you, right? So it's funny, we're talking before the show where, and your comment is that, they're a communist country. They should be very comfortable with a communist mayor. And did I say that out loud? That came out, didn't it? But here's the reality. The communists are practicing capitalism in the United States, right? And they're trying to get out while the getting is good, because we know, or we see, we shouldn't say we know, based on looking back on history, we can look forward and see what the results are going to be of the current regime in New York City. Property values are dropping. They're just falling out. And these people, I think, are saying, I want to get as much as I can or take the least amount of loss right now while I still can. See, that's A. B is, my thought is that China's going to start foreclosing on all of the properties that they're owed money on in New York City, but things are getting delinquent. Because remember, China holds a significant amount of our debt. Our U.S. debt is to China. So they're either going to foreclose, they're getting while the getting's good, or they're going to bomb the place. One or the other. I don't know. I don't know what's going on.
Yeah, multi-billion-dollar loss. It has the internet scratching its head right now.
It doesn't make sense. But I have seen historically in my business practices, in one of the businesses that I acquired, there was a Chinese fund that had put $135 million into an asset, and we picked it up for under 20 million. There was no, and it was in the broadcast industry. Made no sense, but it's like when the Chinese make a decision, and I shouldn't. That sounds probably pretty racist. In my opinion, and in my experience, when people of that culture make a decision, they cut bait and run, and they don't even think about it twice.
Well, Chris, we have our deal coming up.
Yep.
I'm just going to put up the wait list here, but maybe you can talk just for a second about what it means to be on our wait list, how you're going to be talking about that deal, the Atlanta one specifically here, live to people, but only people that are on the wait list can access.
Right. Here's the reason why, right? So the deal that we're talking about right now, you will see up to 25% IRR. Let me say that one more time. Up to 25% IRR with the possibility of almost a 2 times equity multiple on a 3-year exit. This is a hot deal. We will not take, we won't need to take this one public. The last deal that we had of this caliber, we raised $12 million in 12 days or $13 million in 13 days. Just that's how fast they go. The reason that these type of deals go so quickly is because we have a stellar reputation of performing, doing due diligence, and most importantly, being good stewards of the things that God has blessed us with. But if you're not on our wait list, you will never hear about this deal, and you will hate yourself. People found out about our CRZ deal after the fact, and they were just devastated with the returns on that deal. You're looking at another great one. Short term. And the part that I forgot to mention is we're going to give extremely high depreciation for your money. There's even whispers, I'm not guaranteeing this, that if you put in $1 million, you get $1 million worth of depreciation. Let me say that one more time. Put in $1 million, you get $1 million worth of depreciation and 25% IRR, up to 25% IRR.
And I'm going to say up to 100% depreciation.
Up to 100% depreciation. Like I said, there's whispers. That's not a confirmed fact, and it will never be a confirmed fact. It's the best guess estimate of our forward-looking statements. But that's the reality of this deal. But if you're not on the wait list, you will never hear about it. I beg you to please get on the wait list so we can start having conversation. And that link is at homeinvest.com/waitlist.
Yep, homeinvest.com/waitlist.
It's not on there, that's why I asked.
In the comments, go ahead and put waitlist, and our team will message it over to you. Chris, anything else you want to say to wrap up today?
No, I always say no, and then I keep talking.
I'm just going to program you to say yes.
All right. I would love to say this. I would like to thank every one of you for showing up. God has blessed me with experiences, some good, some bad. I made a lot of mistakes, and I've grown from them, and I've gained wisdom as a result. Because you're here today, I have somebody to share that wisdom with, and it makes me be a better steward and a better servant. And it takes me out of the category of the evil servant where I'm burying my talents. You folks allow us the opportunity to share what we've learned and to have a positive impact in the world. God love you all. God bless, and thank you for being here. Peace.
Thanks.